Ladies and gentlemen, welcome back to the channel. We're here to get you caught up to speed on everything that is going on with AMC stock here on the day today. And let me tell you, it's not a bad day at all out there with AMC. So first and foremost, hit that like button, subscribe to the channel. That's a given if you have not done so already and you watch these videos. Thank you for doing that. Secondly, let's get into it. So AMC is down about 1%, half of a percent. It doesn't even matter. Obviously, you guys know none of this matters once we get another ruling from the courts. That's what's going to move AMC stock. That's it. Well, you know, we've seen fundamental things happen recently that have been very positive. We've talked about this before, and we'll probably talk about it again. But AMC just had its best weekend ever for ticket admission revenue. Now, this is fueled by Barbie and Oppenheimer, Barbieheimer. And this is positive, right? Remember this, just remember this, no matter how long this trade takes. Anything that is positive fundamentally helps crush the short thesis. Okay? And that's ultimately what you want to see. No matter how we get there, you want to see the short thesis crushed on AMC. Well, what you've seen recently over the past couple of weeks or so is FTD numbers that are off the chain stupidly high, right? So you started to see the first ramp up of FTDs today, going from about 8.8 million yesterday to about 12.6 million here today. Tomorrow, you're going to see about 12.6 million again, and then 12 million, and then that's going to jump to 13 million, 13.5 million, 14.6 million, and then back to 12.5 million. These are running, right? So this is every single day. This is where the FTDs are. So this is millions of shares that will need to be bought back by hedge funds and institutions. I think this is having somewhat of a positive effect today on AMC stock. And when you look at things such as the option activity, you've seen less of it, although it's still a lot more bearish than you would like to see. You are seeing less option activity today. 35 orders totaling $8.36 million with a positive order value of 1%. Hedge funds are still doing the same bullshit that got them to this position in the first place. That's going to cause them to lose money, but you're seeing less of that activity today. Now, this ramp up of FTDs could cause a lot more momentum to potentially go into AMC. What we're seeing out there in the markets with stocks such as Tupperware and Carvana is this market environment will let stocks run. Now, we need to get a ruling from the courts, and ultimately that could be coming soon based off of some of the option activity that I'm seeing. What you've seen right before the last court ruling was incredible amounts of bearish option activity. I believe the hedge funds and institutions knew a ruling was coming from the courts, but obviously, hindsight's 2020, they didn't realize it was going to be not in their favor. So they were massively caught off sides here. And maybe they're saying, hey, we're going to get a ruling soon. We shouldn't add to these option, synthetic shorts, essentially is what it is right now, because we know another ruling is coming. Well, if we take a look at AMC's data right now, you're at 30% short interest. So you're by far the most short you have ever seen with AMC, at least during this trade. By far, long shot. So that's a problem for the hedge funds and institutions. But keep in mind, crushing the bearish thesis. That's all you need to do is crush the bearish thesis. No matter if that is even raising capital, if the judge does let this go through, I think that could be a bullish catalyst as well as the judge denying it. I really don't see a way out for the shorts that are in this stock, especially when you look at the option activity and the shorts that are there. Boy, I wouldn't want to be short in AMC right now. If you look at the cost of our average, 354%. Cost of our max, 370%. Cost of our minimum, negative 1.16%. Interactive Brokers has a cost of our fee of 150% currently on AMC stock. These are all big problems. If we look at the days to cover, that is still sitting at 7.83, completely out of this world. Cost to borrow fees, 240.31%. Trailing 3-month average. Utilization at 80.53%. I think a lot of this is picking up the APE, the extra shares that are trading over with APE. So I don't necessarily think the utilization is 80% with AMC. I think it's just a flawed kind of data collection from Ortex. You're looking at $759.28 million worth of short positions in AMC. Again, free flow out on loan at 36.02%. So there is that information. Now, something else that I pointed out before, and I'll point out again, is the option activity. Now, for this week, you have a decent amount of option activity, especially on the put side, about 300,000 puts total for this week. On the call side, you're sitting at about 210,000 calls. Still relatively lower than what we have seen recently, and certainly lower than August 18th. August 18th alone has about 1.2 million puts for that expiration. And on the call side, it has about 460,000 calls. So next week's going to be potentially important because you only have 6,500 calls that are currently in the money, 55,000 calls out the money, in the money puts at 20,000, out the money puts at 152,000. It's a lot lower option activity than what we have seen recently. So that means if you do see more options flood onto the option chain because we do get some form of news, well, that could be either really bullish or really bearish. And really the same thing goes for August 25th, September 1st, and September 8th expirations as well. As these are newer, there's not as many hedges from the market makers on these expirations. So if you do get a ruling from the courts sometime in the next couple of weeks, it could be very important, and it could be, give you a sizable reaction for AMC stock. Now, we don't have any company-specific news that is coming out. As I reported in the last video, Cineworld did just emerge from Chapter 11 bankruptcy, which is not what you want to see happen with AMC, but Cineworld did get rid of about $4.5 billion worth of debt. Now, I find the move today in AMC quite interesting because what you have seen just over the last 18 months or so with AMC is when bond yields go higher, AMC tends to go lower, and that's when your small and mid-cap stocks tend to really underperform. And with the 10-year treasury today, that's up about 8.5 basis points. It's now at 4.041%. Almost hitting a new high of this cycle. Higher than what you've seen in March of 2023 when the markets were kind of getting shaky before kind of the banking crisis happened and the Fed injected $400 billion of liquidity into the system and then started this new bull market. So you're seeing this 10-year treasury yield jumping today, but AMC is not reacting as negative as you might have expected it would. Find that quite interesting. Now, the economic data that came out this morning, well, the JOLTS job openings came in at 9.58 million. The revised number for May was 9.62 million. I think the markets were expecting this number to come in a little bit lower than where it ultimately came in. So I think that is somewhat of a reason why bond yields did jump today and why some of your small and mid-cap stocks are not in deep green territory like we seen yesterday. But this was a beat. 9.58 million job openings. You were expecting 9.61 million job openings. Some people were forecasting about 9.5 million job openings. And you want to see this fall. The sooner this falls, the better, because that just means less rate hikes. That means the Fed pausing and ultimately giving us a rate cut a lot sooner. Now, ISM manufacturing PMI still in deeply contractionary territory at 46.4. You were hoping for 46.8. So not quite as good as maybe what some people were expecting there as well, but not terrible data that we got overall. It could have been a lot worse, all things considered. So that's what's currently going on. As far as earnings, I think earnings will be very important. If we pull up the economic calendar, or the earnings calendar, shall I say, What you're going to get in after hours is AMD, Devon Energy, Starbucks, Pinterest, MicroStrategy, Elf, Solar Edge, Pioneer, Lumen, and Virgin Galactic. Likely by the time you guys are seeing this video, all these earnings will be out. We did make a trade in the trading community. If you guys want access to all of it, link down below in the description of this video. We made a trade on AMD. As well as that, I'm looking to make a trade on PayPal. I think that one could be quite explosive, although I do own like 100 shares in the long term. So I do have quite a bit of exposure to that one, like 7 or 8,000. But I would like to get a little bit more maybe before they report earnings. Now, none of these are going to matter in comparison to Apple and Amazon, but really Apple. If Apple gives you bad earnings, that's not going to be a good sign for the economy. It's not going to be a good sign for the global economy, and it's going to mean stocks are going to fall. Now, if earnings are decent with Apple or not as bad as feared, well, that's going to be good. Same thing with Amazon, and that would continue this bull market higher. And a rising tide lifts all boats, so that could have a positive effect to AMC stock as well. Now, if you look at AMC solely on the technicals, things look pretty damn good. As I said in the last video, you gapped up on last Monday, really 2 Fridays ago. You gapped up. Well, you came down, you filled the gap fill at $4.50. You bounced instantly at that level, and you've bounced so far about 10% from there. And now you're starting to go higher again. This is very positive on a technical basis. And even what you've seen today, you bounced at that 100-day moving average at, this is $4.82. I believe you bounced at $4.83 here on the day today. So you held the 100-day moving average, showing a lot of strength. If you can make your way up to that 200-day moving average, that's at $5.36 per share. That's going to be very positive. Ultimately, the courts are going to have the last laugh, and they're going to have the say-so on kind of what happens with AMC. But the settlement could also change things. If the settlement does get much bigger, it's going to eat away at any potential profits of this arbitrage trade. The cost to borrow fees have been doing that this entire time. So most hedge funds and institutions that were in this arbitrage trade are no longer going to be able to emerge with a profit. This is bad news for hedge funds and institutions. So keep all of this stuff on your radar. RSI at 55. The MACD also looks surprisingly bullish, something we have not seen in the last, 3 months or so, almost 4 months. So that's a pretty good sign as well. You're literally in positive territory with the MACD, and you haven't been there since May. So things are looking pretty good. If you wanted to get some exposure via some calls maybe you didn't have before the courts ruled on this last Monday, I think right now is not a terrible time to do so. Obviously, I'm not a financial advisor. Come to your own conclusions, all of that good stuff. You guys understand. You don't make trades or investments based off of someone's sole opinion you watch in a YouTube video. But hopefully this information provided you a little bit of insights on what's going on with the current situation of AMC. Unfortunately, it looks like a lot of waiting as of right now. Hopefully not for all too long. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Most importantly, enjoy the rest of your day, and I will see you in the next one.